Welcome to the ChangeMakers in CRE, a podcast by Re-Leased.
Great. Well, welcome, Julian. Welcome to the show. I'm Julian, the Managing Director of Industrials over in the UK, a REIT over in the UK. Welcome to the show.
Thank you. Thank you for having me. Morning.
It's great to have you here. Hey, Julian, I just thought we could start off by if you could just tell us a little bit about Industrials and what it is you do there.
Sure. So Industrials is or Industrials REIT, to give it its full title, is a specialist UK REIT listed on the London Stock Exchange with a secondary listing on the Johannesburg Stock Exchange. And we own and operate multi-let industrial property in the UK, which is what we would describe as an industrial estate or light industrial in another term. We picked that sector because we love the supply-demand dynamics. There's a sort of structural shift going on in terms of the nature of demand because of e-commerce driving people into the industrial market. And there's very, very limited supply in the UK market because we don't have much land and these things are quite expensive to build, typically in urban areas. So that's why we love it. We've been around actually since the mid-90s. We used to be a fund management business, but we listed as a property company in 2014. And as a business, we've been going through quite a big transition for the last 4 years. So we used to own assets all across Europe and all sorts of different sectors. And so over the last 4 years, we've been selling out of all those other assets and focusing on becoming a UK industrial business. But at the same time, we've also been going through a transition in terms of stopping being really more of a passive allocator of capital to different sectors and different geographies and building a specialist operating platform, which is really focused on delivering great service to the multi-let industrial customer base, rather than being more focused on just where we can manage our assets and our own business. So a really big transition going on in terms of how we think and how we operate and what we do on a day-to-day basis. And as you introduced me, I'm the managing director. On a day-to-day basis, I'm responsible for our platform strategy and our operating strategy internally, but I also oversee all of our real estate activities, so asset management, investment, disposals, and also our technology.
Brilliant background. Sounds like you're taking quite a different approach to the traditional real estate approach that sort of the UK has been well known for over the past, century, I suppose, or centuries.
Yeah, we're kind of trying to do things a little bit differently. I think it's certainly differently for the industrial market. I think what we've seen, we looked out at the landscape when I sort of set up the industrial side of the business. Before I joined Industrials REIT and started this multi-let industrial journey, and looked out at the market and thought, the market's changed a lot in, say, the office market, in the serviced office sector. Changed a lot in things like student accommodation, in self-storage, certainly, and increasingly in residential, where actually landlords were offering service alongside just offering space. And I thought, why can't we do that in the industrial market where it's much more traditional? So we're certainly innovating, I think, in the industrial market, but to some extent sort of applying proven techniques that we've seen in other markets. Yeah.
So I guess it was made famous or perhaps infamous by WeWork, and the trend is sort of spiraled out from there, I suppose. And I know very well that customer experience is an incredibly important part of your business. Just want to talk us through what customer experience means for you, or tenant experience, and why it's so important.
Sure. I think it comes about, on a longer term basis. Why is it growing in importance? I think is down to how people consume space, and the old days, you'd sign a 25-year lease on a full repairing and insuring basis, and the landlord would do your transaction at the beginning, and then they'd sort of wave goodbye. They'd catch up with you at year 5 for your first rent review, year 10 for your second, and so forth. And then at the end,
just be at the pub for the rest of the time,
collecting the rent. Yeah.
The dream.
4 rent checks a year. Nice. It's a nice days. But that's changed. That model's completely changed, and now our average customer wants a 4-year lease, and quite often within that they might have a break, maybe at year 3. So they want much shorter leases. And so that traditional model of kind of short level of interaction at the start and then, leaving people to it for the rest of the lease doesn't really work anymore, because they also want more service on the way through and more hand-holding. And so we needed to change the way that we operate. And I think what we've seen, like I mentioned about serviced offices, is we've seen that actually if landlords embrace that and change the way that they operate to better serve their customers, then those customers are willing to pay a healthy premium for that service. And are very keen on taking it up. So there's good demand for it. So that's why we think customer service is really important, because we think it gets much greater value for our customers and it gets much greater value for us as an organization as well. So we've been trying to revolutionize how we run our business to be much more focused on the customer and a lot, less focused on just trying to make life easy and lock things away for 25 years. So, it's a changing model. So, I mean, the other reasons, obviously, cost is hugely important. If you change from having a 25-year lease and you're paying a 10% agency fee and a bit of legal fees at the start, you can absorb that cost over a really long period of time. Whereas now we have to absorb it over 3 years. So we've also been driven to becoming much more efficient with how we operate our business. If we're churning roughly 25% of our leases every year, we need to get that cost of churn right down, and we need to reduce the time it takes. In a traditional letting, you might be a 6-month void, 3 months rent free, 2 months of fees along the way through. It's 11 months in total. If you take that in every 3 years, that's going to reduce your return a lot. With our business model, we aim to sort of cut that materially, and we have lots of different things that we do to do it. So that's why we think it's really, really important. I mean, I guess, what have we done? I guess is that the other part of the question.
Yeah, I was going to say, well, we're a software company, and that's what it gets me the most interested out of the story. I imagine that software and systems has played a really big part in it.
Yeah, it really has. And I think digitization has been a really key part of it. Because it cuts time and cost and improves consistency through the process, which is what we're seeking to achieve at every step of the way. And also, we look at our business like a chain, effectively, and the chain sort of is the life cycle of a lease, and the business is only as strong as the weakest link within that chain. And every time one of those chain links breaks, the customer suffers. Doesn't matter what it is, and it doesn't matter if you've got a fantastic leasing platform and you bill really, really brilliantly, but you never maintain your buildings, right? So all these different elements need to be in place, and we find that the best way to ensure that consistency is by utilizing technology, and by ensuring that what that really does is make sure the information flows to where it needs to be when it needs to be there, and there's consistency and there's monitoring about how all those different elements and links of the chain are working at any one time. So
what if you give us some examples of what you've seen in terms of increased efficiency, like perhaps in a traditional sense, how long it would have taken to get an inquiry from a tenant, negotiate, get that signed, that full process, get them into your software. What did that look like? What have you got it to now? Because obviously speed is really important for you.
Yeah, so I mean, the traditional model would be a unit would come vacant. If you might have a retained agent already, you might have to go out and find one. Normally, that might take a week or so to find somebody, or tell them that this building has now come back. They'd then say, "Oh, let's go and have a look at it." That might take another couple of weeks, or a week, or 10 days. Then once they've been to see it, they say, "Okay, great, we'll order some photographs." That's another week. Yeah. Then we'll draw up a brochure for that. That might take another week or 10 days. So you're a month to 6 weeks in already. Now you've got a brochure, right? And you nail a board up on the building. And then
the average looking brochure as well. Yeah,
right. Really average looking brochure, which costs, typically we were paying maybe £1,000 a brochure, right? We're currently leasing, we've got 1,600 units in our portfolio. So that would be a lot of money to effectively churn that, right? So you've got a lot of costs there. You've got a lot of time wasted. And then he goes to the market, and every agent would market in a different way. So some would be just using boards. Some would have a high street advertising position. Some would be maybe going online, or they'd have a little black book that they'd be calling through, or they'd be doing mail shots. Mail shots were really popular. They were always a few £1,000s as well. Lots of leaflets flying around and being posted through doors and things. And then you'd have a sort of a monthly call where they'd phone in and say, "Oh, so this is what's happened. I did 3 viewings. None of them are interested. Let's have a chat next month." And then, next month, "Oh, I've done 2 more viewings. Somebody's quite interested. They want to do a second viewing next month. I'll let you know." And so the next, you're 6 months down the line. Then you finally find somebody who wants to take it. You appoint the lawyers. The lawyers will get stuck into their 40-page lease. That might typically that takes about 8 weeks of negotiations and challenges and issues and so forth. And then finally you get to the end of it and you sign up your lease, right? So you might be 9 months down the line. What it looks for us now is we have everything sits in our digitized platform. So our operating system, as soon as a building, in fact, if sometimes before it even becomes vacant, but let's just say when it becomes vacant, as soon as it's marked as vacant, it's online. It's immediately live. All marketing particulars are pre-written, stored in our system. There's a holding image for every asset, and then when a building becomes vacant, we go and take a full suite of photographs, with a virtual tour, plans, the lot. But as soon as it's vacant, it's online, and our system automatically pushes to every online portal that we use and our website. The marketing particulars is completely consistent. So wherever you go, you'll see the same wordage. You'll see the full quoting information and pricing. That's the other thing we found with third-party brokers, is that they never knew the right price, because landlords are generally not very good at telling them. I think it's fair to say.
Yeah.
So from a customer perspective, you come in and you say, oh, I remember doing this as a tenant when I was looking for an office space, and I'd say to the agent, okay, so how much does this cost? And they'd say, oh, it's £22 a foot. I say, was that all in? No, that's the rent. Okay, well, what's the service charge? Well, I think it's about £4,000 a year.
Chuck rates on top.
Yeah, what are the rates? Well, I'm not sure. You have to look that up for yourself. Insurance, not. I don't know what that is. So you're quoting me. You're quoting me in per annum and per square foot, and I have to try and equate the two. But you're also not giving me the full picture. So again, on our website, lease price calculator, you can see all your costs per week, per month, per year, per foot, per meter, however you want to cut and dice it. And then, so we're straight on market. There's no wasted time. Then, if you want to do a viewing, all inquiries will come through to us. We've got an in-house lead support team. They get back to you within a matter of hours. You do a viewing, you meet one of our team, much more informed. And then we also use a thing called our Smart Lease, which is a 3-page lease. It's entirely digital. So we can move quicker than any customer needs to move. We get people in
there or some sort of e-signature on that.
So effectively, it's generated straight from the heads of terms. It's e-signature only. There's no paper. And the average Smart Lease that we do takes less than 14 days from the point of agreeing terms to be completion, which is roughly a 2/3 saving on when it works with traditional leases with lawyers. Mm-hmm. So massive cost saving.
Huge.
And normally there's no agency fees and no legal fees. So the cost of that transaction is much lower.
So you've got a band of lawyers that just hate you now because
we don't use lawyers.
Yeah,
because with the Smart Lease, we just say, look, these are standard terms and conditions. It's written in what's called plain English. There's a plain English society in the UK who champion the need for no nonsense language, and we've got a kite mark from them, so the customer can read it, they can understand it without a lawyer, and it's non-negotiable. And we say, look, if you want speed and efficiency and good value for money, cut the complexity out of it, and the customers love that. And
any education on that, because it's so new for them. They're sort of saying, look, love the idea, but am I covered as I would be in the other? Like, I imagine there's a little bit of education up front.
It's funny because in our business, so most of our customers are SME companies, small to medium-sized enterprises, and about half of them, this is their first commercial lease.
Right.
So they don't come at it with an understanding and expectation.
They don't know how great you've made it for them.
Well, there's an element of that.
They're going to go to the next one and be like, "What the hell? What is this?"
Well, and that's the other thing, right? And then you get the other people who've been somewhere else, and they've been with another firm and another landlord, and they say, "God, the hassle. I don't want all of this and that." They're all things like service charges. We do fixed maintenance. So through the term of your lease, and it escalates each year by a fixed amount. So you know exactly when you sign your lease what you're going to pay through the term of your lease, because every tenant thinks that every landlord is the year after they move in is going to sting them with a massive refurbishment program and stick it all through the service charge in 1 year. And because it has happened, but it's rare. And so we take all of that complexity and all that risk away from the customer, and then we say, look, we'll fix it. There's a premium there which covers the risk that we're taking, but we can assume. We understand that risk, right, much better than the customer does. So the risk premium that we put on it is way lower than the risk premium that they would put on it. Mm-hmm. And so we can make a better margin, and they basically take a lower risk proposition, which is better value and more appealing to them. So these are all things that it's a different approach to. I think broadly it's a risk transfer. The old real estate leasing model was landlord transfers all risk onto tenant. Yep. Upward only rent reviews, full repairing and insuring lease, 25 years effectively of ownership. The new leasing model that we've seen proliferate and be so successful is landlord assumes real estate risk, and that they can price and understand and quantify. And therefore the tenant is only really assuming the occupational risk for the period that they need the building.
That's the key difference, right? Is that you understand it, like the property, you've seen the data, the industry, so you can take on that risk, right? Whereas a tenant has, in most cases, they would have no idea, right? They would have
correct.
Very little idea.
I mean, the best way a good example to quantify that is on service charges, where every tenant thinks that landlord's going to double the service charge next year, right? It's just the natural, the understanding of the view that comes to it. Maybe it's not double, but it's there or thereabouts. And we looked at our service charge budget versus actuals across our whole portfolio and realized that on average we were 1.5% out. Right. And so we took a view that, well, there's no risk there, right? It's diversified across the whole business. So why are we introducing this big risk factor into the leasing transaction process? And there's huge discussions and people want caps and collars and all, all this kind of stuff, when actually it's a completely irrelevant risk. And it was slowing down every transaction we were doing because we were having to negotiate it. Even if it was just a few days on every transaction, when you're doing 300 transactions every year, that actually really mounts up. So it was about trying to take that risk out of the process and just price it in with certainty for the customer. So we try to do that across the board, really.
That's fantastic. I mean, a lot of it is common sense, but it hasn't been done before. At least not, it's certainly not common. It actually strikes me as very, very similar to what we do as a software company, right? We're in the traditional and the big shift that we've seen, that software as a service bought out, started by Salesforce sort of 20 odd years ago. But what it was instead of buying a massive thing and then owning it and all the risks up front, it's like right now our customers rent the software effectively and they'll sign monthly or annual contracts. And so the onus flips across. It's not all about the upfront sale. And then after it's like, forget about it. We've already got your money. We have to keep proving to them year after year or month after month that we're worth paying for. And so that means we have to understand the customers. We have to actually understand and care about their experience. And it's very interesting for me to see that crossing over into property. It's super interesting. I imagine that, this is it's certainly an industrial. I've never come across this. I've never heard of it. And I'm sure it's a trend that's going to grow, but you must be, you be ruffling a few feathers there around the UK from the traditional landlords. Are they making people nervous about this new approach? Because it's not like a company can just necessarily just switch across. Like there's a real journey of like transforming the business and the knowledge you need to get to that state. I imagine it must make some traditional players a bit nervous about how they can compete in the future.
Yeah, I think, like I said, we did two transitions, the asset transition and the operating transition. And the latter was definitely the harder part because you have to change the culture of your business and your staffing and your systems and everything. So it was definitely difficult. I think Industrials REIT has a really big advantage in this because we're a REIT, we're permanent capital. We've got very long-term investment horizons. And so we can invest in our platform because we're going to effectively defray that cost over an almost infinite amount of time. Obviously, we do put a time on it for accounting purposes, but over a very long period. Whereas a lot of, I'd say, larger kind of commercial players who we compete with are typically more based on the kind of private equity model where you're saying, look, I'm going to be in this for 3 to 5 years, and then I'm going to move into something else. And if you do that, it doesn't work to invest in a huge operating platform because there's no guarantee you're going to get value from it. You might sell before you finalize that platform, or the buyer at the end of it may not want it because they might already have their own, in which case it's just sunk costs. So we tend not to see, we can't, there isn't really that much of an economic rationale to do it in those other kind of players. Or you're maybe a long-term investor as an institution, but you're investing across multiple asset classes. And so, an operating platform like this works very well in industrial. It's reasonably similar to the kind of platforms you see in offices, albeit a lot of the fundamentals are different. We don't have on-site staff, for example. It's not just about broadband. Our customers are an awful lot more diverse. There are some big fundamental differences, but the concept is the same. So generally, a best-in-class operating platform is sector-specific. Yep. You don't see people operating student accommodation as self-storage on a single platform, right? They typically have very specific features. And so if you're a multi-sector, you want to go down this approach, you're going to have to build multiple operating platforms with different approaches. And it generally doesn't work that well. It's very difficult to do. I haven't seen it done that successfully unless you are huge, unless you're a Brookfield or maybe a Blackstone.
You got to nail your niche, right?
Yeah, you got to nail your niche, right? Exactly. And focus is so important. And we've benefited from that enormously over the last 4 or 5 years. Just saying this is all we do has really helped our business. So we think that gives us an advantage, and I think there's a reasonable explanation why it hasn't been so common in the industrial market. The ownership within industrial over the last few years has been quite short-term, in nature, whereas I think the office market has been longer term in nature, and you've seen these operating businesses rise up and be very, very successful in that serviced office market. So it's a nature of the capital base gives us that advantage. But the knowing what we know, having done what we've done, it's a hell of a mission. And it's definitely daunting. We've learned an enormous amount along the way, and we know we've really been learning as we go along. You couldn't buy in this experience. We couldn't buy in a platform at the start, so we've had to build it from scratch, and it has been an enormous journey. I think the opportunity for us, though, is really that we would like it if other people came into the sector alongside us and to some extent competed with us.
Sure, yeah.
Because I think what we've seen in other asset classes where they're very ownership intensive, so like student accommodation, right, or self-storage, where go back 10, 15 years, these were what you call alternative sectors, which traded on much higher yields. And what we saw is actually these platform businesses came about and they democratized the ownership of these asset classes, right? They remove the hassle because you can just go out and buy an operating platform and then you can invest heavily in that sector, and the growth fundamentals behind it are really, really exciting. And so we see the barriers to entry to owning multi-let industrial being quite high because it is hard work.
Yeah.
And actually, if there were more operating platforms in the market, it would effectively make the barriers to entry lower and effectively push the pricing up quite materially, we believe. So there's a nice upside, we think, for the whole sector if more people go about it the way that we're doing it. But for the time being, we're fairly alone. There are other people following a similar model, but they tend to be on different scale or in a different sort of form.
Yeah, I mean, there's a real there's a lot of bravery needed to sort of march this far out in front of the market and really trailblaze it. But I really love it. I really rate that you had a vision, and I've known you for a while. I know you had that vision, and you've been very clear about that vision and the value, and you've just really gone at it and made it happen. And I know very well that it's not easy doing things like this that are that new. So it's been very impressive to watch, and it's great. I mean, I checked before we got on. I checked your share price, and I see it's been rising nicely as well. So obviously the market agrees with your approach and what you've been doing too. So it's a great sort of proof point there.
Yeah. The great thing about the listed market is it doesn't pull any punches when to give you its opinion on what you're doing. So it's been very satisfying. There's been lots of other things going on behind the scenes which impact the share price, but
yeah. There's you got a scoreboard there the whole time there, right? So you always sort of know everyone's watching. Well, that's awesome. Look, I think it's like I said, it's been fantastic to sort of watch you lead this out, and I think it will. I truly believe that this is what we're going to see a lot more of. This is the trend. I can't imagine that we'll be going back to the sort of traditional 25-year lock and lease, and the landlord gives you the space, and you won't hear from them unless and they won't do anything on the building unless you call so often because the roof is about to collapse. Like I just can't see us going back to that, and I think it's really impressive. You've spotted this trend a fair way out, and you've really gone after it. The last sort of question for me is there any other trends you see emerging coming through? And that, like, not necessarily just in your space, although of course interested in this space, but is there any other trends you see in commercial real estate in general that you think will have, a big impact over the next, say, 5 years?
Yeah, I mean, I think that for me, it's an obvious answer, unfortunately, but I think the ESG agenda is massive, and I think it's inextricably linked in with the technology agenda. Right? Every nowadays I find that when I'm having discussions about technology, it always just trends to ESG and vice versa. And I think that it's going to be enormous because the data requirements are huge. How we collect and gather and understand the information around our buildings and their carbon footprint and emissions and social impact is going to be enormous. And I think for me, it pushes us further down this route that we're going down in terms of that interaction with your customer and delivering service, because what you're seeing, or we're already seeing, is that our customers are turning around to us and saying, well, can you give me the information, please, on my building? Or we're turning around to them and saying, can you give me the information, please, on your utilities usage, for example? And it's going to bring us into much more regular contact. I mean, monthly, if not daily contact with our customers, sharing information about our buildings and their use of those assets. And so, the need for a platform which facilitates that level of interaction is only going to grow. So that ESG and data agenda, I think, is really interesting. I think looking a bit more further afield and to give a more exciting answer, I think things like the metaverse are really interesting, and there's a huge amount of chat going on at the moment, and the industry is all trying to figure it all out. It might wane into nothing, but I think it is quite interesting. And when you see people like CBRE going in, then you can start realizing that there's some proper interest going on there. So they're
going to make you £1,000 brochures, but for the metaverse.
Yeah. I think it's going to be interesting. But yeah, I think next 5 years, data and ESG is going to be all consuming.
Yeah, it feels to me as though like there's just been, for an industry that was just very stable and continued on its way for decade upon decade upon decade, all you really had to do was own the asset and then get an agent to fill it every 10 years or so, whatever it was. It feels like that has really changed. That world's not coming back, and you have to be a completely different operator in a completely different business to be able to survive in the next sort of generation, I think. And it's going to be very interesting to see if we will see certain businesses or certain owners just sort of tap out and say, look, this, we had a good run. I don't have the energy or the enthusiasm or the knowledge to be able to go and reinvent myself or reinvent this company, and perhaps it'll see some good opportunities come into the market for companies like yourselves who have gone out there and taken the initiative and have sort of blazed this new trail?
Well, I think, and the same for yourselves, because I think the days of running almost any scale real estate business in Excel are going to come to an end, right? With this need and for data and whether largely legislative need, regulatory need to provide data, manage data, and you won't be able to do that on a spreadsheet. And I think that in its own right, that need to invest in technology, manage technology, and a lot of people say that every business is a tech business nowadays, is going to be massive. And I think that your business is providing that solution to people who are willing to move on to that next stage. And like you said, those people who aren't, I think it's going to be very difficult if you're not willing to embrace that.
Yeah, I mean, and we're surprised all that there is still plenty of spreadsheets out there, and some billion-pound portfolios, billion-dollar portfolios around there still running with spreadsheets at the center of their business. So they've got a long tail. I imagine they won't be redundant just yet, but I absolutely see that change coming as well. It's going to be a very interesting next few years from here. Well, thanks a lot, Julian. That was really, really interesting. Thank you for joining us. Really enjoyed the chat. And best of luck. I look forward to catching up again soon.
Cheers. Thanks, Tom.